everybody, welcome to this week's video. It's Wednesday the 11th of December. My name is Julius de Kempenaer and I am recording from Amsterdam in the Netherlands. Last week we took a deep dive into all the sectors, so not much has changed there. And for this week we're going to start with a look at the current sector rotation, but as I said, not much has changed, so we can do that really quickly. And then I want to dive into one of the sectors that is really doing well at the moment and see if we can find some interesting individual stocks that are worth looking at or maybe better avoided. As promised, let's start with a look at the weekly RRG for the sectors. As I said, not much has changed since last week. So we have materials, staples, healthcare inside the lagging quadrant, and real estate has just joined that group. It's crossing over from weakening into lagging, basically continuing that relative weakness. We see a similar pattern for utilities. They've also been working their way through the weakening quadrant. They continue to be on a weak RRG heading and they're heading for the lagging quadrant. So these are the sectors that basically are expected to continue their underperformance in the next couple of weeks. And then in the improving quadrant, we had energy, which was looking really promising, which has now rolled over and is now pointing back. So making it going from promising to worrisome, I would say. And slightly similar for technology, although that tail is much shorter. If you compare the tail length for energy with the tail length for technology, big difference, meaning that the obviously energy is also much further away from the benchmark, making it a little bit more volatile, sensitive to moves, and it's rolling over. So it looks as if underperformance is being reignited there. And here we've got technology, which is on the left-hand side, inside improving, but at a very short tail. And if we look at how that behaves, so if we let me highlight that technology tail for you, and then you can see how that tail is basically shrinking, where it was quite long and now all of a sudden it's shrinking altogether. And what that tells you is that that trend is kind of condensing. It's still a relative downtrend, but it's at a very stable pace and it doesn't have a lot of momentum because it's very close to the 100 level. So technology is still in a relative downtrend, underperforming, but not by much. It's very close to the benchmark, much closer to the benchmark than, for example, that energy tail. Now, if we go to the leading quadrant, there we continue to see a good move for financials. And the last video that we did was on seasonals, and we identified financials as being more positive and tech being more negative for the month of December, and that difference seems to be working out, at least as of this week. Industrials has rolled over, still inside the leading quadrant, but has rolled over, so it lost a bit of its momo, a bit of its momentum. And then we've got communication services continuing their way higher into the leading quadrant, as is consumer discretionary moving their way higher on the RS ratio scale at a stable momentum. So look at the difference between energy and technology, for example. Short tail, same level of momentum, and then you've got energy, long tail, same level of momentum. And what that means is that consumer discretionary is in a very stable uptrend that has a bit of pace because it's got that momentum going. It's stable, but it's going, so it's not accelerating. And financials are continuing to do well. Now, if we take this outlook, if we take this picture to a daily RRG, then obviously the image is slightly different. But the one that I really want to focus on is consumer discretionary, because look at the consumer discretionary tail. It rotated back into the leading quadrant. It's got the highest reading on the RS ratio scale, which is still good. And it also completed a rotation on the right-hand side of the graph and now pushes back into the leading quadrant. And that makes consumer discretionary, I believe, the strongest sector in the market at the moment. Now we've got a quite similar move for communication services, albeit a little bit less. Financials is losing momentum on the daily scale, whereas it is positive on the weekly. We've got energy very clearly acknowledging that rollover that we saw on that weekly chart. So it's been rolling over, and now you see that long tail moving into the lagging quadrant. So weakness for materials, for real estate. And so what are these? Let me see. These are utilities and industrials. So industrials was already rolling over inside leading, and utilities was inside the weakening quadrant heading there. So utilities is confirming its weakness. Real estate is confirming its weakness. Staples was pointing slightly up on the weekly, but rolling down, so that's kind of stable. And now we've got technology, which has been picking up a little bit, but again, look at it's quite a short tail, very close to the benchmark. So these conflicting tails for technology on the weekly and the daily basically acknowledge that sort of sideways, boring move in tech at the moment. Healthcare was deep inside lagging on the weekly, it's rolling over, so there's a lot of stuff that is confirming that weakness. And then we've got discretionary communication services definitely confirming their strength, and financials kind of in the middle, ambivalent, I would say. So the sector that I want to focus on today is consumer discretionary, because I see that this is an important move. Let me show you how that went. So we had that move here, and you can see the date here. So this is November 6th, where we move over, and now we go through that long stretch of positive move. We roll over, and now we curl back up again. So you see that move where we move from leading into weakening, and now we curl back up again. So that's basically the signal that a new up leg within an already existing relative uptrend is now starting. Before we dive into the individual stocks in the consumer discretionary sector, let's have a look at the price chart for XLY. Here's the weekly chart, and clearly seen is the break above the November 2021 high that occurred a couple of weeks ago. We had that break, and now we had like 3 weeks of consolidation, and then another 3 weeks, 3 weeks ago we started accelerating, and we're continuing to do that. All of that positive movement in the price has led to a break of the relative downtrend, and that is what we're playing at the moment. That is what we're looking at. That is why these RRG lines have pushed above 100, and that's why the tail on the RRG is now so strong inside the leading quadrant. And if you look at this, it looks as if it has just started its turnaround, has just started a new move. There's obviously a bit of a risk creeping into this sector at the moment, because it's already 20 points, so slightly less than 10% of downside risk if you take the former resistance as the first support level. Nevertheless, this chart looks really strong. Higher highs, higher lows, and you see a turnaround in relative strength and absolute strength in the RRG lines. Now, if we bring that to a daily chart, you can see that movement a little bit more granular. So very nice higher highs, higher lows, and you can see now how this move, which looked like almost a straight line up on that weekly chart, is now a series of higher highs and lows inside the relative strength line. And the RRG lines are a little bit more granular. You see that there has already been a little dip, so a rotation. Let me get this straight: a rotation from improving, leading, weakening, and back into leading again. And that is what's happening right here. So the RS ratio line remains well above 100. The green RS momentum line dips below 100, and when it gets above it, so this is here, there, it's in leading. When the green line dips below 100, we move to weakening, and when it then comes back above 100, we go back into the leading quadrant, and that's that move that you just saw on that RRG, where it's hooking back up into that leading quadrant, basically underscoring the current strength. And to complete this picture, let me bring up a monthly version of this chart, and what you see here is that after this massive run up, and we see that break. So if I do a very basic technical analysis technique, you can say that this peak here is 200, let's say 210, And then the bottom of that, the first low is 125. So 210 minus 125, that is about 85 points. And basic strategy, you can sort of get to a price target by adding the height of that move onto the breakout level. So 210 plus 85 is 295 as a target for the consumer discretionary sector. That is a long way away. That is a massive return, but we have time to get there. It doesn't happen overnight. But what it tells me is that despite the fact that there is a bit of risk creeping into this position, as I just told you, the overall outlook for consumer discretionary is actually pretty promising. Here also you see that this relative strength, this is the monthly relative strength, is actually bottoming out and getting starting its way higher. So consumer discretionary, probably the strongest sector in the market at the moment. Not sure how long it's going to take, but the overall outlook, especially for a little bit longer term time frame, is actually pretty good for consumer discretionary stocks. Okay, so what I'm going to do to look at the individual members of the consumer discretionary sector, I've loaded up the RRG with the individual stocks on the left hand side of my screen, and I have a price chart on the right hand side of the screen, and it's got the relative strength versus XLY, and it's got the RRG lines against XLY. And that allows me to hover over, go over the individual members, look at the tails, and then bring up the individual chart if I'm interested to see what is going on in the particular stock. Now, to do that, we highlight the first tail, and you can see that everything else is now dimmed. You can still see the interaction, but we have a focus in this case on NCLH. I am not interested in this one because it's rolling over. And I'm going to do this pretty quickly because otherwise it gets very boring if you see me just working through my way through. So this one, so here, the second one, immediately I think, hey, this is interesting because what's happening here is that Tesla is actually making one of these strong rotations, leading, weakening, and I'm back into leading. So I want to see that chart. So when I go Tesla on the right, I can totally see why that is such a strong tail because it's almost a vertical move. And we are now reaching all-time high levels, getting very close to all-time high levels around 370 for Tesla. I apologize for the small font here, but I had to jiggle and wiggle a bit to make it all fit on my screen. So that shrunk the font size here. But it's more about the pattern on the chart and the levels than the exact number. You see that it's almost closing in into that all-time high level, and obviously when that breaks, that'll be a huge boost for Tesla, especially because it's again, it's one of these broader ranges, large base breakouts, 2-3 years. So if that happens, it's probably going to be some fireworks there. You can see that the improvement in the relative strength is already there, it's broken out, moving higher. We're taking out some previous highs, and that all translates into that strong rotation on the RRG. So Tesla, definitely one of the stronger stocks, maybe the strongest stock in this sector at the moment. CCL not so much. So Lulu, this is one that I like to look at because we come from improving and then we're moving to the right. So let's look at this individual chart. So here's Lulu. And again, I can see why that's popping up, but this is a huge move here. I personally would probably not chase that higher, but look at the relative strength here. This is just getting started. So how would I approach such a stock? I would definitely put it on my watch list. But what I think there's a lot of risk now here because you're definitely not buying at the lowest point. But I'm very interested in this relative strength picture. So if this relative strength picture can hold up, if there comes the inevitable kind of setback or decline, I am looking for a new higher low to get in place while relative strength and RRG lines are holding up. And that's why that is such an interesting tail to keep an eye on at the moment. Let's work our way through. So here, Garmin, this is an interesting one because it's rotating again, coming out of leading, through weakening, and now just a very short stint through lagging, and now almost through the center of the chart, straight back into the leading quadrant. So let's look at Garmin, and then you can see why that happened. And again, this is one of these stocks that made a huge run up. Also here you can sort of project a target which is far out, which we did for the XLY sector itself. And again, probably had too much of a run in the near term to chase it, but the relative strength is definitely, you know, picking up. And look at these RRG lines, how they are turning back up. So I would definitely keep an eye on Garmin. We want to see that RRG line, that relative strength line, to push to new highs to confirm that rotation. But again, as I said, it's on an interesting trajectory, and certainly one of the stocks to be aware of. So GM, kind of a similar story here. GM, relative strength dropped back, but you can see how the trend is starting to pick up. So as long as we're holding up above that support level in relative strength, you see that the dip in the price is already there. We tested that overhead resistance area. So if GM can put in a bottom, a new low, a higher low, let's say roughly above the area here, which is around 50 bucks. As long as it stays above 50 bucks, relative strength can turn around and we can push this higher. We can see GM pushing into the leading quadrant. Not much. This could be interesting. Let's have a look here. So Etsy, because the stocks that we looked at so far, they were in the leading quadrant for a reason, because they had such a long run up, and that's always a bit of a catch-22. Do you want to chase that trend higher, because it is a strong trend? Do you want to chase it higher, or are you going to wait until it drops back? It's always a very difficult situation. The area on the RRG where we're getting now, which is the upper part of the lagging quadrant, with the ones that are on a good RRG heading, almost closing in on improving, and then later on into the improving quadrant, that's where you probably get stocks that have different price patterns, different trends, and you could be able to find real early turnaround situations. So let's take a look at Etsy. And that's what you see here. You see that Etsy coming out of that massive downtrend, and then even 2024 wasn't great. But look at how this is now turning around here, and you can see that happening in the relative strength line as well. It's very early. I mean, we're still well below 100 in the RS ratio. But the little hook up and the acceleration, because if you look at the acceleration, this is actually a pretty nice acceleration in the last couple of days trading, where it seems that we're getting out of the doldrums. So this is a situation where, and you know, just look at what we had for Tesla and Amazon, like almost straight up, LULU, almost straight up, and we need to kind of wait for some sort of a correction to get back in, if we're not already in there. This is a situation where the stock price is relatively low if you compare it to its own history, and relative strength is turning around. So this is the early adopter phase, the early turnaround trends that you can pick up, and Etsy would definitely fit into that bucket of characteristics. Let's move on. So all these tails that are going into the southwest for long positions, don't even consider it. If you want to play short, these could be interesting charts to look at. But I'm focusing on longs right now. Moving on to through the lagging quadrant, all of them weak headings, weak headings, weak headings. And now we got into the improving quadrant, and we see BBWI. Look at BBWI. Again, look at this. This is not trading at highs. It's not pushing against its all-time high, but it bottomed out against the bottom of its range. Super strong support now, and we actually gapped higher, and you can see how that relative strength is now bottoming out, and that is now starting to push those RRG lines higher. So again, this is a stock that you're not buying at the high, which probably would happen with Amazon and Tesla and Lulu and a couple of others. But you're kind of picking this up after a turnaround. That's why it's inside the improving quadrant. It's got a little bit more of an inherent risk because the turnaround is not, at least the turnaround in relative strength is not really there, it's not really confirmed. But I think that the odds are now turning in favor for a stock like BBWI. Let's see what we have left here. So DPZ could be one of those. DPZ. Again, bottoming out, relative strength still struggling, but it has picked up a little bit. We need to wait and see whether we can put in a low here. That's probably why that look at that last bit is not very strong. So this nice comparison. If I compare DPZ and BBWI, which we just looked at, if I highlight them both, which is actually a very nice function that I like on the new RRG, where I can highlight two tails instead of only one. I can actually highlight multiple, it's not confined to two. And you can compare the move. So look at, this is 1 week of movement. Look at how BBWI jumps and DPZ is almost doing nothing. That is a very clear indication that BBWI is way better than DPZ. And I think that we can agree if we look onto that price chart as well, and the relative here, which is actually dipping, and it needs to turn around really quickly to keep up that positive rotation on the RRG lines. This is not CMG. This is similar to DPG, so I'm not going to look at that. And then here's Amazon. It looks a little bit like the technology sector. You know, it's very close to the benchmark, very short tail. But it's at a good, it's got an end there, so it's a good trajectory. And here, this is interesting because you can see how that break of Amazon is breaking out of that range. Again, an almost straight line up, but in terms of relative, it has lagged a little bit since the summer, and it's now getting out of those doldrums and starting to pick up again. Do we want to chase Amazon at current levels? Personally, I don't think I would do that. If you have it, great, but I would probably wait until we see a dip and looking for a new higher low, and then jump on the bandwagon when you see that relative strength line again popping above its previous highs, and that will actually push those RRG lines above 100, which will then push Amazon into the leading quadrant on the RRG. And that's it. These were all the stocks inside the consumer discretionary sector. Recapping, consumer discretionary, probably the strongest sector at the moment. If you look at the individual stocks, the big names, Tesla, Amazon, really driving the market higher, really driving XLY higher. But there are a few other lesser known stocks which are at least interesting to watch. We looked at LULU, we looked at BBWI, we looked at Etsy. All of those definitely worth a look inside a sector that is already strong. As usual, thank you for watching. I hope you enjoyed the show. Let me know what you think in the comments below the video, and I'm looking forward to seeing you again next week, same time, same place.